fully grasp today's topic, India in a volatile world, navigating challenges, building strengths, I thought it's best to do a quick rendezvous around the world. Believe me, it'll be less than 2 minutes. Okay, so time starts now. The US, big economic red alert during the first week of May, a surprise GDP contraction. Crossing the Atlantic, things are certainly weirder. The UK is facing a coalition of awfulness, super hot labor market, just like US, runaway energy prices, just like Europe. Germany, big gas problem. Either pay for gas on Putin's terms or go cold turkey. China, well, in trouble too. Colossal COVID wave. And when China is in trouble, global growth is as too. So, among all this, India seems to be a good place. Hot, humid, and happening. But then came this headline from the Economic Times only on Wednesday. RBI goes for a shock hike to rein in inflation. What does that mean? My EMI certainly likely to go up, but for our panelists here, I don't think any one of you have such existential problems. No EMIs for your 6 BHK penthouses, no car loans, etc., etc. But will your capex plans suffer? Will it dampen your animal spirits? I think there's one man in this panel who's clearly raring to go despite all this, but we'll talk about that later. But first off, Mr. Khara, I wanted to ask you, were you shocked when the rate hike came? We weren't clearly expecting it.
It was not a shock but a surprise. Why? Because it came at a point when the policy was just announced a few days back only. But yes, of course, if you really ask me, it's a very timely action taken by RBI, considering the fact the kind of inflation numbers which were seen and also the kind of trajectory which was visible at that material point of time, keeping in view of the global scenario. I think perhaps it's a decision taken at the right time. And maybe if at all I may elaborate a bit about this, the kind of liquidity surplus in the economy was almost as high as about 5.7 trillion. This 40 basis point also is going to suck about 87,000 crore worth of liquidity in from the system. But nevertheless, I would say that I believe that the RBI will be very closely watching the inflation print and accordingly will be calibrating the interest rates if at all required going forward.
But the worry was just when we were seeing a credit growth in the banking sector reaching double digits after a long time, 11.2% growth year on year, that's when the news happened. Will it dampen the spirit, so to speak?
No, I do agree that the economy had started witnessing a strong growth path, but nevertheless, one cannot ignore the global macro developments and one has to ensure that there should be adequate order in the economy, and I think from that point of view the regulator was well in their thoughts, and they have kept these thoughts in their mind and accordingly they have acted upon.
But Zarin, 50 BPS hike in CRR, supposed to be sucking out 87,000 crore from the banking system. That is where we believe a lot of industrialists seem to be a little bit more apprehensive.
I would say, as Mr. Khara said, that the surplus still is quite high in the banking system, and frankly, banks are quite keen to lend. It's the credit growth which has been muted. We've seen corporates really in the de-levering mode in the last 2 years. The debt to equity of corporates, the top corporates, if we look at some of the listed companies, it's come down to as low as 0.6 debt to equity ratio. So to that extent, with banks having lower net NPAs, closer to 2%, and with surplus liquidity and corporate balance sheets being very resilient and very strong, I think, to my mind, as bankers would be quite keen to lend. And clearly, household indebtedness as a percentage of GDP, if you look at India, India is quite low compared to maybe a UK or US. It's just around 30%. So to that extent, even the individual ability to borrow is quite high in India. There's still some scope. So as banks, clearly, we would be quite keen to lend.
But Mr. Khara talked about a very important point about tackling inflation. Mr. Mehta, I was reading an interview of yours where you said in the 30 years that you worked in Unilever, you've never seen such a situation. Really? I mean, we've seen several wars, crude going up and down, but that's quite a statement.
Yeah, absolutely. When the crude went up in the early part of this millennium, it was just crude dominated, which led to inflation. But right now, we are looking at many other commodities, including palm, for instance. And when you reach a situation where a common man reduces the consumption of soap or detergent powder, then it does become a cause for concern. So the question that you had raised to Mr. Khara about interest rate, I think it was inevitable. We must understand that as a government, as a governor, you have a task to also look after a large majority of your population. And inflation always bites the poor much harder. So there was very clear indicator that steps would have to be taken to rein in the inflation. Having said that, I don't believe this is a structural demand-led inflation. And this has got a lot to do with the constraints which came in during the COVID period and supply chain constraints. For instance, palm, which has become a big issue in our country as well. That happened primarily because at the time of harvest, there weren't enough labor to pluck the crop. That's what happened in India in 2020 during the tea season. So this is not a structural demand-led. Geopolitical issues also aggravated the situation. I think another 6 months, if the Ukraine crisis settles down, we could start seeing the tapering of inflation. But right now, yes, it is a cause for concern.
Stagflation, is it too extreme, or are we really staring at such a scenario?
At a macro level, we are still not in that state. What the headline that was carried was my concern that we should not let the country get entrapped in that. We have to be very cognizant of that. If we look at it, we have just about recovered last year what we lost in the first year of pandemic. Mm-hmm. And we were still in the process of recovery. So it will be a very fine balancing act. The governor will have to ensure that you balance it in a manner that you don't stifle growth, but at the same time, try to rein in the inflation as much as possible.
Let me ask two of the other captains of India Inc. here. Mr. Piramal, does it dampen the mood, your capex plans, or you want to go all guns blazing?
I think at the present moment, I don't see capex being dampened today because I do feel that there is demand. And if you look at the future with the geopolitical situation, I feel that India is well positioned. And capex, you go through these cycles, there would be some costs that rise in interest today. But I don't think today is the time when people, at least I don't think from people whom I talk to, anybody is reducing capex plans as of now.
But those big bank plans, or has that been moderated into more moderate mid-level expansions, more brownfield than large greenfield projects?
So what I see is that people are looking at various sensitivity scenarios, but I am not seeing that there's going to be a huge cut down. At the most, one would watch for a few more months to see how things are. But overall, at least in my view, it's still optimistic. Yes, these are challenges. The whole world is facing them. But I think I still feel that we are on a good wicket. And India, in terms of demand, there is demand for India's products in India and outside.
Mr. Jindal, you have not just steel, but very ambitious plans in the green energy space. What's happening around the world? On one hand, input prices are going up. but you're enjoying a commodity super cycle of the steel front. How does that calibrate vis-a-vis your renewable plans or even steel plans?
So let me first answer your earlier
Sure.
discussion with the panel about this 40-50 basis
Yeah.
points which RBI has increased, and Mr. Khara said he was surprised, which is a fact. But when the whole world is going through this big change and the commodity prices are going up, inflation is high. Even in US, one has never heard that US can go through a inflation of this level, and India is also following that same trend. And as Sanjiv mentioned, that the poor man gets maximum affected on inflation. So I think it's the primary responsibility of RBI to see that the inflation doesn't go up. Mm-hmm. And therefore, I was surprised on the contrary that it's not increased enough, though it affects me as a borrower. But still, we have not had such a long run of such a, let's say, benign interest rates. I have not seen in my business career to date. Mm-hmm. So therefore, I would say it's okay. We need to control inflation. So that's one part. Secondly, about renewable, I think the way India is going to depend on energy, or the world is going to depend on energy, it can't be on coal, given the pressure on our global warming and our sustainability. We have to move towards renewable or towards a clean energy which is green, which is not emitting carbon dioxide. So the only way is you go nuclear or you go solar, wind, hydro, whatever. So therefore, I don't think mankind has an option. So this is the only way forward.
Nuclear is a political hot potato, but.
Sorry?
Nuclear is a political hot potato, but.
Yeah, I mean, it is hot potatoes for sure. Nobody wants it in their backyard. That's also clear. But India is a very large country. But we do need nuclear because you need baseload power plants. And nuclear is the only way forward. Today, in Sweden, in Denmark, in Finland, they are building nuclear power plants. Mm. So, those countries, if they can build, why can't we, as a developing country, why can't we do that? So that's one. But still, we need to build these renewable power plants. But given today's high cost of steel and high cost of commodities, that's also become a challenge. Because now that cost has gone up dramatically and people have put their projects on hold. Mm. So we have to watch how these commodities come back down.
But volatility also opens up new opportunities. And I said that I'll ask you this question. And clearly you want to do something mega in cement. We have all been talking about it. But tell me, there's been a constant grouse about when it comes to Indian promoters and financing. They say that raising money for LBOs in India is extremely difficult. Indian banks cannot lend against shares. You have to rely on foreign banks. How big a handicap is that for both you and Mr. Piramal, who've both done large acquisitions?
Now, so I think that's clearly a big handicap for the Indian corporates. Because, Zarin is here representing foreign bank and Mr. Khara is representing Indian bank. And, I can't go to Mr. Khara to support me in lending because against shares, Indian banks are not permitted to lend. They can lend if I want to buy the asset, but if I want to buy the shares, they can't lend. So but Zarin can, she has the flexibility, or Ajay can, they have the flexibility as NBFC. But why not the Indian banking system? So this is something which we need to discuss, and we need to change that perspective of the RBI. That why not Indian banks should allow acquisition financing of share acquisition financing.
You want to add anything?
No, I totally agree with Sajjan. If you look at it, the Indian banks are really the largest contributors in the economy. They can't lend. Foreign banks, with the exception of one or two like Zarin's, all of them have actually left the country. So where do you get finance? And promoters in India are now depending on funds, and these are foreign funds. The IRR of a foreign fund is anywhere between 20 to 25%. So it makes us uncompetitive in the global environment. I mean, today, with these large acquisitions, it's very difficult to fund them. Otherwise, you'll have some private equity coming in, getting it at a low price. So we are actually sapping the Indian economy. And, you know, probably these restrictions were put where banks couldn't lend for acquisition at the time when people thought that there would be speculative buying. But today it's a very competitive, transparent process, and we should definitely allow that to happen.
So
and NBFCs are limited. They don't have enough of capital to really fund large acquisitions like the cement acquisition Sajjan is talking about.
No, what is sad, Arijit, is that we are letting go our marquee assets in India to foreigners because we cannot get it financed. I mean, Indian corporate cannot finance such big deals of 5 billion, 10 billion, whatever it is. And foreign companies can, as Ajay said, private equity comes and buys, road assets and whatever, which is giving very high returns.
Is that something that Indian banks should also look at, Mr. Khara?
We may not be permitted to fund buying the shares, but line of credits is something which we have done in the past when the Indian assets were acquired. That is something which we have already made available, and I think that came handy at the material point of time. I think Mr. Sajjan Jindal can probably confirm. But
private equity today is becoming more and more mainstream. They've raised a lot of money around the world. A lot of it is getting deployed in India. How do you see them? Are they friendly permanent capital, or you have a different point of view? Because a number of your subsidiaries have had private equity partners as well.
See, normally the only issue with the private equity is that they come with some kind of a definite time horizon. So the certainty of the equity, which is generally seen as a lender, which we normally see, and for that matter, any stakeholder would like to see the stability of the equity. That is, of course, something which is at risk in such situations. And if at all, whenever they offload in a chunk. So that also lead to the market disturbance as far as the listed equities are concerned. But yes, of course, I would rather say that this is one of the requirement, because if at all economies have to grow, then they have to also look at the private equity as an option. It may not be the only source, but it is still an option.
Ladies and gentlemen, we are now joined by the Honorable Finance Minister, Sri Nirmala Sitharaman ji. Zarin, you and I, we were having this discussion, and you said you somehow feel MNCs are more bullish on India than the Indian peers. I'll come to Mr. Mehta about that as well, although Hindustan, Unilever, I don't know whether to call them an MNC anymore, but is that something that you really feel that?
No, I never said MNCs are more bullish. I said MNCs are bullish. Not more bullish than Indian corporates. I would say yes, and we're witnessing a lot of interest. I think the PLI scheme has evoked a lot of interest, especially given the China Plus One strategy. And we're already seeing the kind of interest that has come in the 12 sectors that government has invited. If one sees the power of some of the FDI, if we were to look at Vietnam and Samsung invested in Vietnam. Today, Samsung is 25% of Vietnam GDP. Of course, it's a small country, but that's the power of the investment that you see. And Samsung exports $66 billion annually from Vietnam. Wow. And 50% of their global phones and laptops are made, iPads are made in Vietnam. So that's the power of some of the global MNCs who come. And I think we need to supplement local capital with global capital coming to India. And other interesting thing that one is seeing is the global capability centers. Today we have 1,400 plus global capability centers. Accenture alone has 250,000 employees. Our bank has 27,000 employees just working in the global capability center. And that is really giving a lot of employment, having a very good second order impact. 45% of the companies India, outside their home market, have India global capability centers. So that's quite telling that outside the home market, India seems to be the number 2 choice for global capability centers. So, yeah.
Mr. Piramal, we were talking about sources of capital that is available for industries big and small, especially the smaller industries, the SMEs. In volatile times, we have seen the NBFCs playing a big role. Lending a hand to smaller companies who don't enjoy the AAA rating. Mr. Deepak Parekh recently said that the arbitrage that the shadow banks had earlier vis-a-vis banks is going. So perhaps it's now time to revisit that argument that, big NBFCs should get converted and maybe even corporates get a look in to banks.
I think we'll have to really look at how do we want to do banking in the future. We talked about today credit growth being about 9% over the last few years. We are all convinced that India needs to grow at least 8% GDP, which is in real terms. So if you look at credit growth must be about 18%. If we don't do that, we will not be able to reach our targets of 5 trillion of an economy. Our banks in India, we have just probably 30 or 40 large banks compared to the US, which has almost 4,000 banks. So we need to have more banking. We are supposed to have banking on tap, and that was announced in 2016. There's not been a single banking license which has been given on tap since then. So we'll have to relook at it. And after a certain size, I don't see NBFCs growing bigger because you need a permanent source of funding available. Today, we have to deepen the debt markets. We'll have to allow public deposits and put restrictions. I think when Mr. Parekh talked about the arbitrage, it was the regulations that were coming in for NBFC and banks, which is good. Let's do that. But let's also get the advantages of banking, which are there for some of the NBFCs.
But the permanent worry is that money is fungible, intergroup transfers. How do you monitor? That's been the perennial worry.
I agree. So let there be more transparency, let there be more regulation. I think that should happen. But that doesn't mean we don't have banking for large groups. Because in India, you do need promoters to be behind banks. Because as you know, cash is the only raw material for banks. So who will provide that? It's when you have a stable promoter base.
Mr. Mehta, we had touched upon inflation, and I wanted to come back and ask you this, that inflation on one hand is leading to weak demand conditions, but you also said in another recent interview that you're winning market share across channels, categories, both urban and rural. How is that possible?
No, there is nothing conflicting about it. When we talk about demand at aggregate, we talk about demand of the market. And when we talk about the market share, we talk about sharing the pie. And invariably what happens when times are tough, the consumers do gravitate towards large, trusted brands. And we have a lot of brand saliency, a lot of powerful brands. So it is not surprising that the consumers move towards. And the other thing, what we do ensure, that the product superiority does not go away. And even when it comes to share of voice, we ensure that the share of voice remains above the share of market. So the saliency is there, the product superiority is there, the trusted brands are there. And that leads to gaining market share. But these are two different things. And I think as a country, and also we would rather have the pie become bigger than just looking at gaining market share.
Zarin, we are running out of time, so quick question. Has IBC been the biggest banking sector reform that you've seen in the last few years? And both of you can answer. Mr. Khara as well.
I would say it's really one of the good reforms because we're seeing the balance of power between banks and the borrowers much better than what we saw
fear
before.
of God amongst corporates.
And I think banking sector would have solved at least 5 lakh to 6 lakh crores of distressed assets thanks to the IBC. Also, I think it has brought better credit discipline because borrowers know that it can't only be the bank issue. It is borrower also who has an obligation to resolve it. So I think it has really helped.
But Mr. Jindal, is there a worry that it's also perhaps killing entrepreneurship?
So while I'm one of the strongest proponent of IBC and supporter of IBC, and the fact that Mr. Mittal came and invested in India is because of the IBC. That became apparent. So therefore, IBC is definitely a fantastic reform that this government did. The challenge only is that it has killed a lot of entrepreneurs in India. I mean, India is a country of entrepreneurs, and there are good and bad both entrepreneurs. When you move, you will have some bad apples as well. So it is up to the banking system which should control the who to lend and who not to lend. So my only limited question is whether it has killed a lot of entrepreneurship in our country, because India is known for that.
But despite IBC, Mr. Khara, the problem is a lot of people would argue it's still taking too much time for a resolution.
I think the way I will respond this question is that IBC has helped in two major things. One, the ecosystem for the resolution of the brownfield has come into existence, which was almost non-existent earlier. For a country like us, we were required to have one such effective system. And second, losing the control of an enterprise is no more a fiction, which was earlier being perceived as a fiction. And that's why, that is the other reason why the discipline has come in. What Mr. Jindal indicated in terms of losing some of the entrepreneurs have lost the control. Perhaps, the need of the hour is that there has to be adequate discipline for all those who borrow. And that is the other point which Zarin also mentioned, that we have seen a lot of discipline with the borrowers. Before they borrow, they think twice also. And I think in a way that is good. And that is ensuring that the capital is put to the right use and it is not led to some unhealthy practices. So I would say that overall, it's a very good development. And if we really look at the insolvency code, which has been adopted in many of the developed countries, it has taken almost 10 years plus. But nevertheless, it's an evolving code, and I'm sure with each of the next iteration, it is getting even better.
Mr. Piramal, last word to you. Too many tribunals?
So I think I just want to comment on the IBC and hence the tribunal. Overall, it's been in the right direction. The IBC is a good, as it said, the balance of power shifted. Earlier, if you borrowed, you were the powerful person. Now it's the other way around, or it's at least more balanced. I think the point is that we need to move this faster, because very often when companies are referred to the IBC, you will find that there is a lot of stress already, and timely action cannot be taken unless the final decisions are taken. So whether it's the NCLT and CLAT and everything goes up to Supreme Court, I've seen, we have to move faster, and we'll have to add more people so that the recovery will be better for the system, the companies can be revived. That's the only point.